The Oracle newsletter is what we're going to be discussing right now. Let me pull this across, and I believe we have Tim Ord on the line. Hi, Tim. How are you?
Good. How you been? So it's been a couple of days. So,
Yeah.
so quite a bit of changing.
I just wanted to mention the Oracle newsletter. I got it on the front page. You could check it out. I went to Oracle newsletter, Googled it, and it popped right up. And here is the man himself, Tim Ord. Tim, can you fire away with all that information that you've got for us?
All right. Well, we're heading into the year end, which is basically favorable seasonality going into Thanksgiving, which is a couple of weeks away. And then after that's Christmas, which is, a good month or so away. But usually this time, seasonality is bullish. And we got a chart here. This is our first chart. Oops. For some reason that there's kind of few things going on here. If you notice this low right here, if you do Fibonacci retracement compared this low to this low, the market rallied up all the way up to here and retraced.
Just for 1 second, I need to stop. We're looking at a chart, folks, that has the SPY on it. So tell me about the SPY.
Yeah, I'm sorry. Yeah, this is the SPY. It's a little bit messy, but there's potential. This could be a topping pattern. I'll put it that way. And so this is kind of a preamp. I'm bullish all the way into year end, possibly even January. So this pattern may take another couple of months to play out. But this is the SPY. When I'm thinking about this pattern that may be forming is the three drives to a top pattern. And a three drives top pattern, here's top one, here's top two up here. The market's pulled back 6.8% of the retracement, which is a deep retracement against the previous rally up. And what I'm expecting now, we're down actually here, but I expect the market actually go up and hit a new high. How high is high is break above the October high.
So are you talking about a time frame that you're looking for?
By year end, I'll put it that way.
Yeah, good.
So could be year end. I got shaded pink areas right here. The reason why they're shaded pink, that's where the trend came in at 1.20 or higher. I pointed out those trend readings in that area. Normally when you get into a tan area and the trend readings are above 1.2 or higher, that shows panic in that region. And normally when you go back into it, you get panic again, and that suggests support. The market actually has pushed down a little bit lower we're into actually the support region down in this vicinity right now. But I still expect this market in general is still going to work higher. We're going to hit a higher high sometime probably in December, and that'll be the tell story. What I think is going to happen here. This is three drives. This is what I'm thinking is maybe developing is a three drives to top pattern, and trying to find my deal here. But the market rallies up, then retraces at least 61.8% of the previous up leg. This is supposed to be 61%. That's supposed to be a sixth. Then we rally back up to a third high, and the third high is the top. And once you reach a third high, if you break the previous high at a lighter volume, it predicts the market will pull back down to where the pattern began. And on the SPY, it'd be around the 650 area, 650, 655. We think that's a possibility that this is pattern forming. It's not complete yet. We have not hit a third high. I think that's still in front of us, but I think there's a good chance we may hit a third high. And the third high will predict if the market is drawing that three drives to top pattern. And also VIX, if you notice here, as we're hitting higher highs, the VIX is actually making higher lows. That's usually a bearish sign going into you want the VIX basically at least break even compared to the previous highs. But if the SPY start making higher highs and the VIX is starting making higher lows, then that's a bearish development. That's actually what's happening here. If you notice this high right here, which is basically this high right here is, even though the S&Ps are higher here, the VIX actually is making higher lows, and that's the bearish divergence. So VIX really should be making lower lows as the S&P is making higher highs. We don't have that. So we have some bearish, we got bullish seasonality all the way to year end. I'm due expecting a new high, but these are kind of warning signs. We are long on the SPX right now, and I expect we'll break to new highs, and we'll see what happens when new highs are made. There's another chart that actually is kind of worrisome too. Last October, if as long as the S&Ps are making higher highs, which it has going into October, and the volume is higher than the previous month, that's a bullish continuation. And normally, as long as that scenario, you're making higher highs and higher volume, the market in general, that's a bullish confirmation that the market will keep making higher highs. We haven't touched a new high yet this month above the October high. But for instance, if volume comes in, significantly less than the October high, and volumes say at least 10% less, and you make a new high in November this month, and the volume is lighter, then that's another worrisome sign. So you have a VIX making higher lows as the S&P is making higher highs, and if you have a volume that's not making a higher volume than the previous high, even though the SPY is making a higher high, that's, again, a bearish scenario. So there's some things that are kind of setting up here that may lead to a top of some sort. So, but for instance, if November goes on to make higher highs, and the volume actually makes higher highs than the October volume, or at least equal volume, that would be bullish. Then that rally would continue higher. So this is a possible setup. I'm kind of early in the game. This is going to happen or not. We have to hit a higher high for this scenario to develop, which I think we will. If we don't hit it in November, we'll probably hit it in December. But at some point, the market usually does not make higher highs and higher volume. At least you go back up and retest the previous high. So at some point, we are going to test the October high. So.
Well, okay, that sounds great. We'll be back with Tim in a moment. We're going to take a break. Basil Chapman sitting in for Tommy O'Brien. And we're looking at the Dow, looking at the E-mini right now, trying to get back to that 200-period moving average of 671. It's at 676 right now. We'll be right back. Hi folks, Basil Chapman sitting in for Tommy O'Brien, and we're looking at the Dow down 728 and the S&P down 106. We've got Tim Ord on the line from Ord Oracle. Tim, could you continue, please?
All right, let's look at the gold market. This is the bullish percent index for the gold miners index / GDX ratio. It's a weekly time frame. We showed this chart last week. A couple weeks ago, we got a buy signal. The buy signal is generated when the 10-period RSI falls below 25. So that's pointed out there. That's come in late October. We got that buy signal. And I went back. You can go back a lot further. This chart is easier to see where those buy signals came. The bottom window is the GDX down here. This is GDX here in this window. And so they're all pretty good. Sometimes you flip sideways for a little bit. Sometimes you come right at the bottoms. But anyhow, it was a good signal. Now let's go on to what's happening now. So we're rallying up. We had 3 gap play to the downside. GDX started back in October. That was completed late in October. And now we kind of rallied up. We actually had some pretty good volume days. One was yesterday, and another one was, looks like that would have been Monday. Anyhow, we're down today, but I don't think we're not pulling back much. I think in general we're still going to work higher and get back up to this high, which is around the 85 range, give or take. And I think that's going to be resistance up there. We're not too far from a big gap. I pointed out that area, that volume right there formed on this day right here. And that's the reason why I have a gap there. If you test the gap on a lighter volume, it could be resistance. And chances are we're going to are going to test that gap on lighter volume. So I'm thinking that gap's going to be resistance, and that we may start a trading range. What it looks like on a there it is on a bigger time frame. This is the GDX on the monthly time frame. Monthly GDX goes back to 2016. And anyhow, what I'm thinking is going to happen, we're going to run up to that gap. Gap's going to resistance. We're going to come right back down. So in general, if you test a previous high on a lighter volume or a gap on a lighter volume, if you can't get through it on higher volume, you reverse and attempt to take out the previous low. Well, the previous low is basically the previous low we just came off of in October, which give or takes around the 70 range. And so I'm thinking we're just going to flip sideways here in GDX and build a trading range. How long a trading range? Could last several months. So we're due because, basically, the market's been pretty much rallying all the way from 2023, really. You couldn't quite tell it until 2025. So we're due for a multi-month consolidation. So not a top of any consequence. I don't think we're going to go deep against the previous uptrend. I think we're just going to find support around 70, give or take, in that vicinity, and build a trade range and go sideways. And I think go sideways for, I think could be next year. I pointed out in the, hold on one second here. The volume, here we are. The volume last month came in at 364 million shares. So that's a heavy volume day. So if you test that high on 10% lighter volume, that high is going to be resistance. So you got a couple of things going on here. You got a daily high volume down day that created a gap, and on the monthly time frame you got 654 million shares, which is a pretty high volume. That volume goes back quite a ways before that volume could be matched. So that's the reason why I think that it's just a trading range. What that says to me is I think the big stocks, the Newmont Minings, the AEMs, whatever, all those big stocks will consolidate along with GDX, and the second tier stocks will start to perform. I've been saying that for quite a few months or quite a few weeks now. I think that's what's going to happen. I think the second tier stocks are going to come to the forefront. And so the bull market's not over. The bigger trend is up, but I think a multi-month consolidation is likely here. The bigger trend, if you notice, this is the first time we hit RSI up in the 70 range, going back to, looks like about 2001 or 2000s, first time we got above 70. So this is a breakout to the upside on the RSI. This is what they call initiation of an uptrend. And we talked about, this is on a monthly time frame. We talked about this WAG breast thrust indicator. A lot of times, especially if they come off of bottoms, you see a big thrust on this WAG breast thrust indicator that says that's initiation of an uptrend. Well, the monthly charts can do the same thing. I use the RSI on this, but this is initiation of a month on a monthly time frame to the upside. So XAU probably have started a multi-year rally. You'll see some consolidations along the way. If you look back in this period here from 2000, 2011, whatever, you had some consolidations along the way. I think we're hitting one right now. But I think this market is pretty much just going to go sideways here for a couple of months before it breaks up again. So this is probably a 12-year cycle, and so I think this bull market in the gold stocks and actually the commodity market could last over the next 12 years, because the commodity market is also breaking out to the upside. That's like the energy stock or the heating stocks, gasoline stocks, whatever, energy stocks. They're probably going to lead the way to the upside here, along with the precious metals and all of the other
that's an inflationary call, right?
Yeah, that's what it looks like. It's going to be similar something like 2000 to 2012. So even though Trump's going to be fighting, the gas prices, I think it's already playing out that and the gold stocks is going to be inflationary. So it's just a 12-year cycle. He'll probably try to fight it, but I think the market's already playing out that on a bigger time frame, this is initiation of an uptrend on a monthly time frame. So on general, this middle chart I've talked about, this is the monthly XAU to NDX, which is the NASDAQ stocks. And have the RSI, basically the RSI is probably going to stay above 50, trade between 50 to 70 over the next 12 years, where the gold stocks will outperform the NASDAQ stocks. So it'll be interesting how that plays out. But this is time to be in gold stocks. It's been miserable over the last 12 years, and that has changed in 2024. And so a lot of these penny stocks and the gold stocks will probably be at some point $5, $10, $20 stocks. So we'll see how that plays out. But that's what it looks like in the coming future here. So yeah, we're reaching an inflationary period.
It's a great perspective you gave us. So, folks, I just want to tell you that this has been, Tim says XAU, that is the Philadelphia Gold and Silver Sector Index. Hey, thank you very much for that. It was very informative. Always appreciate it, Tim. And we'll speak to you on Tuesday coming up. Have a great weekend.
All right, you too. Thanks a lot.